This is no joke. We're looking at the S&P absolutely needing to hold the blue line. Because if they don't, we will start another correction. So we start by saying, did we break trend? That's the picture right there. The next question would be, can the bulls continue some strength from last week? Which bring us to point number 2. Can they build on the sideways movement from last week? In other words, sentiment last week felt bullish, but it wasn't. All we did was hold the Friday rally from 2 weeks ago. So we did hold it. That's good news. But we didn't make headway. We chopped plus 1%, minus 1%, plus 1%, minus 1% in aggregate. So here's the plan. If I'm a bear, I will be looking to short rallies, especially against resistance. And that depends on the ticker. So it may present itself with indices or specific stocks. I must diversify my time frame as well. I can't do it all in 1 month or 1 week. Bulls, I need to stay more humble. I'm starting to sense a lot of the gumption coming back to life. We don't have evidence of strength building yet. And this one is for both bulls and bears. Please focus on the levels, not the headlines. We are in headline mode. The more headlines there are, the more mistakes we make. Speaking of levels, here's the SPX. The lines have not moved. I've added a couple. You can see that the rally, we're going to open probably around the 5,700 tomorrow morning. We're going to face our first test. The good news is the test, the resistance, is a problem, but it's also the opportunity. So they have the chance to tackle the other white lines. So those are zones, not actual hard lines in the sand. Technically, I can argue that the SPX can hit almost 5,900, 5,880. And I think up there, it would start clearing the entire problem from March. But they will face some resistance at 5,740 and 5,780. So look out for that. Meanwhile, they cannot afford to lose 5,500. They do have support around 5,580 zone, but they have weakness that could extend to 5,500. And if we do, because then we will have an immediate drop, probably 100 points, which will confirm the breach of trend. Here's another look of it on the SPY version. And I still think we have one more dip. So strength into the top of the orange box, 566, 67. I think we've been met by selling. We should bring back the action down to the yellow box, which is 561-ish. And then the test will be, can the bulls hold it? 558 must hold, 558. You lose that, you risk testing 555 and 54. You do not want to lose 554. 571 is a legit test above. Even though the NASDAQ has better soldiers, I think it has a harder time rallying because it doesn't have ETFs like the financials and the XLV. Tests there start at 486. You have resistance at 487, 94, and 500. Those are just round numbers. There's plenty in between. 472 needs to hold, that white line right there. And if you lose that, again, you start sounding the alarm. Will they be able to hold the Thursday, 2 Thursdays ago, the support? Because if they lose that, which is 466, if they lose 466, we start another leg lower. Lastly, we talk about the IWM. So this one has been in terrible shape. So I would look down first and say they must hold 201. That's the first level of support zone. And then if they lose that, then they must hold 190. I'm being generous, 197, 96. It's a zone. If you lose that, then you start another leg lower. I am patient. So in summary, just like last week, I'm going to remind the bulls to stay or get a little bit more humble, and the bears to stay humble, although start seeing some opportunities to hold the shorts a little bit longer than before, and follow through. Can the bulls build on the base they built last week before the bears bring them down below it? I would like to remind you that the world is a shit show, and we have to be watching out for headlines. Focus on the levels to control the emotions so we don't mistakenly act on the wrong lines. If people in the world, anywhere, are okay with their money levels, they will spend money on Bitcoin. But if they're afraid about their job and their meals, they are not going to be buying Bitcoin. So if Bitcoin breaks out of 88 roughly, then the markets also should follow, because that's a sign of global risk appetite. In other words, don't be too bearish if you see a breakout in crypto, especially Bitcoin.